Hey, everybody. Thank you so much for coming out. Steve here. And we have an exciting topic that's especially relevant right now because everybody is saying we are in an AI bubble, Steve. And what are you going to do about it? I said, well, let's peel that back first. So, that first, you have the question of, are we in an AI bubble? We aren't necessarily are there, but we'll talk about that. And then we're going to try to compare it back to something a lot of us are old enough to remember, and that's the bubble from 2000, which was the dot-com run-up. So that's what we're going to talk about today. Standard disclaimer applies. There you can read it. You can pause if you're listening at home and make sure that you agree or make sure you take everything that I say with a grain of salt. And you can find more disclaimer information available at anchorstarwealth.com. Okay, let's take a look at the hype cycle. Is there an AI hype cycle right now? Absolutely. Everything's AI. Your kids are talking about it. You're talking about it. Your Uber driver's talking about it. So everybody is an AI authority right now. It's which AI do you use? I'm a Grok user, which if you would have said 3 months ago, are you an AI user? I would have just laughed and said, well, what do you mean? What do you mean user? Like, that's like drug terminology. You're a user, right? So, but then I started really seeing what AI could do, and it was helping me with kind of peeling back some accounting and legal questions I had with the firm on how I structured it and what we're doing with our shares, and really being able to go through and walk line by line about, have you thought of this? I'm like, well, how about this angle? And so a lot of the questions that I was going to reach out to our lawyer and CPA about, I was able to at least get smart in that topic. So then when I bring the question out, then, okay, I kind of know what I'm talking about. So it's really a way to get educated. So I do believe it is the future. I think it will be mainstream, just like, search went mainstream forever. Now we have AI. I think search gets killed off because if you're going to have to type it or talk it into a search, why not do that to AI? Right? And get a much more thorough answer. So with that, you get the hype of it's changing everything that's out there. Well, maybe so. People are worried, is it going to take jobs? Oh, probably. I mean, tech takes jobs over time. So I'm sure AI is going to take people's jobs. Am I worried about it? No. Should I be worried about it? Maybe. I don't know. I don't, not a crystal ball that has 100% of the future, but I kind of, think it's a lot like WebMD. Right? We still have doctors, even when WebMD came out, because people, and I would use an example from my household, but I would probably get in trouble for that. So, but I would say hypothetically, a person I know very well could look on the internet for a symptom that she has. And then after she reads for 15 to 20 minutes, she has every, rare disease on earth, convinced that, yes, I'm sure I have that. Sort of thing. So a lot of information can be, kind of get you in trouble with too much, right? So not so worried about that, but we'll see. But I wanted the comparison though of how much is AI going to change the world versus how much the internet changed the world, I think is a good one. And I think the answer is it's going to change it significantly. But how does that relate to the bubble that we're in or potentially in with stocks? So the internet boom, just remember there were a lot of new companies that were, pets.com, right? It's like, I'm going to go to the online pets store and order a dog. Ooh, that didn't work. So yeah, maybe not everything, right? So a lot of firms failed. Here you're looking at market leaders of names that you know of, right? So, and we'll share a couple of those. So that's really kind of the different is the basic market structure. So we'll talk about the leadership. So when you think of profitable incumbents, again, they got profitable doing something else. So NVIDIA has been making chips for a long time. Now they're making AI chips. Okay. Amazon, Facebook, they all have core businesses that made them as big as they are. And now they're branching into AI. If you take companies like pets.com, we're just off the shelf. There was no company. Right. And this is back in the days. It could be, a college kid that just quit Harvard and now he's got this idea, he and his two buddies, and now they're going to change the world. Well, there's a little more risk there, even though obviously some of them made it. But now you hear in the news about the Mag 7. Well, now the Mag 7 is leading the AI surge. That's a little different than just a bunch of pop-up companies that you haven't heard of. Okay. Also, when you talk, and we'll get into that here in a second a little more, when you talk PE ratios, they're actually still lower. And so PE ratios, price to earnings, right? It kind of tells you how much you'll pay per dollar of earnings for a stock. So the higher it goes, You think of a normal market as that 18 to 20 PE, maybe 22 PE. You get into tech names like a 25 PE or so because there's a little higher margin there. Well, when you look at the PE ratios, they really haven't approached the level that they were getting in 2000. Right. Well, there were no earnings, right? These were unprofitable companies that somebody thought was a good idea, and they went off and tried to turn them into a real company. So that suggests that we're on a different risk profile because there's a real company behind it, and it's not insanely overvalued. So this takes us back to the top NASDAQ stocks in 2000. Some of them are still here, some are not. Right. So you go across, how's Microsoft? Yep. Still working. Cisco's still around. Intel has been kind of through its own house of pain. Right. It has always talked a big game. But yet there it is. And it's still around. Oracle. Yep. Okay. Sun Microsystems. I don't know if they're still around or got acquired. I did not look up, but certainly, Dell's around right here in Round Rock. So it was public, went private, back to public. So it's had its own journey, certainly, if you will. MCI WorldCom, well, that didn't turn out great. That went under. Let's see, Chartered. Can't even read that. Chartered, somebody. They're not around anymore as far as I know. And then Qualcomm, and then Yahoo is, of course, the big name, right? So you have Yahoo out there, and you had a yahoo.com email address. And I do, yeah, I know. So I see some loud and proud members. But I will chuckle, have some of the younger folks in here. And when we see an email address for a new client come in, if it's Yahoo or AOL or Hotmail, we already like, okay. Expect when you send the DocuSign, it's going to be a major event, right? So it does. If you haven't made the switch, we do have a chuckle about that. So those are the market leaders in 2000, and they were completely overvalued, if you will, during that time. Some things you just need the eye test, right? These charts for the exact same amount of time, and as much as people don't like when I say it because I manage your accounts, but the market going down is a good thing. That is healthy. So think of Texas weather. If the sun shines all summer and we never have any rain, that causes a problem, right? So it's part of that cycle. So markets that go up, and then instead of resetting lower and then going to the next higher leg up, if they just continue up, then when they come down, it's really bad. So you look at the .com on the left-hand side of the chart here, that was that run up. And whenever you see a chart, whether it's an individual stock, an index fund, or the overall market going vertical, that's fun in flying terms, but it's not fun in market terms because you're like, yeah. And then when do you get off the train, right? When do you make the call? When it's going vertical, you just don't know. It's a complete dart throw. If people are being irrational, Tesla stock's one of them, it just goes up and up and up. And it's just like, well, we can't buy it here. And they're like, well, should we sell it? And I'm like, I don't know. It's a long-term good company, but just don't be expecting it to continue up forever. It needs to come back down, consolidate, and take a breather before it can move up again. So if anything, when you look at the recent decade, we've had a great decade of market returns. Yes, there were some things in there weren't so fun. 2022 was no fun. Everything was down in 2022. Outside of that, we've had a few tantrums. COVID, we've had the tariff tantrum, tariff-mageddon, whatever it was we had earlier this year. Most people forgot about it. We throw a fit every now and then guess what? The market goes higher. So, I make the analogy of pick your favorite vacation spot. Wherever that is, it rains there, so many times a year, and the odds of it doing that during your vacation are high, right? Because that's your luck. But it does happen, right? So it doesn't make the place any less attractive to go to. It just happens to be pouring rain today. So that's the difference in the two. So is the bubble popping right now? Well, there's people that are saying, there's a lot of pain in the market. And I said, well, pain's relative, right? If this is pain, then you just haven't experienced pain. But if you're some of the older folks in the room that were through we're investing in 2000 or we're investing through the global financial crisis, yeah, pain. All right, you got scars to show for that. That's kind of real pain. Even right now, if we were in a baby bubble and we're just resetting valuations to normal, it's actually just allowing us to now reset for a while and move higher. I personally think that's what's going on. Can I guarantee that? No. But looking at the evidence, there's two distinctly different situations on these charts of how fast things moved up. So that's the difference when you look at the charts there. Okay, real earnings versus ideas. Big issue with the underlying company. The internet, when it came out, the person back up further than the personal computer. Go back to like the microwave, or go back to the airplane. People are like, "Oh, we're making an airplane fly," and most of the population's like, "That's literally the dumbest thing I've ever heard." It's like, we understand balloons. Yep, okay, balloons. We can see that. Airplanes, no, not happening. Yeah, it did happen. Now it's part of everyday life, even though it scales back when the government's closed. Found that out. But yeah, so like that's a crazy idea. It changed the world. The microwave. You're going to take a box and plug it into the wall, and then put something in it, and it's going to cook it, and it's going to come out of the box at the perfect temperature. That's obviously not going to work, right? And it did work, right? Military was to thank for perfecting that technology before it went mainstream. Now you have at least one in your house, right? And then off into the personal computer. Obviously, that's a dumb idea, and it changed the world. And then you have the internet. So the internet was really kind of, if you could follow along with the others, the internet was like the complete leap of faith, right? So ones and zeros are going to be able to make things happen on a screen, and now they can all talk to each other all over the world. The World Wide Web. Whoa, what is this even talking about? And now it's part of our everyday life. So, but the idea when everybody heard that, of like, okay, the World Wide Web, right? How can we invest in it? That's when ideas were popping up left and right, like pets.com, right? And boom, off it went. So there were no earnings. There was just ideas, and that's what people invested in, and that's what led to the bubble. When you start talking about real earnings, when you talk about the Mag 7, they are huge companies and they make real money. So guess what? If they are wrong about it, then they're going to be fine, right? It will cost them money. Their stock will go down, no doubt. But Amazon will not lose its core business if they're wrong on AI, right? So when you talk about who are today's names that have a lot of hope behind them, I'll throw it out to the crowd. If somebody has one that they happen to know, I know CoreWeave is the fifth one to the right. I like the first one. I see the ticker Irene. That's one favorite name anyway. But do you know?
Something.
What is it?
Something. Oh no, I don't.
Oh yeah, I don't. Yeah, APLD. Maybe that's Anthropic. No, that's private. Anyhow, there's names on here you don't know, and these are revenue projections, and that's how when you're dealing with unprofitable companies that have good ideas, they don't talk earnings to you. They talk revenue. So they want to talk about the other side of the story. There's like, look, how much more spending on making this happen. And everybody's like, yeah, let's throw money at them so they can spend more, right? So we'll see. Are we 5 years from now, we'll look at these 7 names and maybe they're around, maybe they're household names in, maybe they've get left for dead along the way. But that is definitely different than the core Mag 7 that you've heard of. And then, of course, if you have profit, you have to have profits to have a margin. And if you have high profits, then you have a high profit margin. So what does all that nonsense mean is that they can afford to fail. There's a safety net for when they go to explore the AI thing. So even if AI, so call it a fad, right? And maybe it never lives up to the hype. I don't think that's true, but I can be wrong. And we laugh about it, 5 years from now. Hey, remember that AI thing was a thing, right? And it's just like, oh, AI is going to change the world, and it just flopped. Well, that happens in the investing world. Not every idea is a good one, but these companies, the Mag 7 will still be around even if AI flops, right? Because they have cushions out there, and that's the point of this slide. Is that with high record margins, you can afford to be wrong and not lose your business model. So when you think .com crash and you're thinking things going down 90%. I can't guarantee you anything because of my license, but I'm pretty sure Apple and Amazon and Google are not dropping by 90%, even if they are dead wrong in the AI space. Okay, so here is you talk about the separation. Now this is real. This is facts on a slide. So you can't really debate these, but you have the red line up there. That's the Mag 7 profit margin. Okay, killing it. The blue line is the S&P 500, doing well. But since the Mag 7 are doing so well, that means the other 493 are really not bubbly at all. If anything, they're kind of like hidden. It's like their low performance has kind of been drug up by the Mag 7 to where it's like, okay. So when you say and quick ad for the firm. Why don't I just spy and die, right, by the S&P 500, and then I just hold it my whole life and I'll be fine. I'd be like, yeah, you could, or you could pick the 7 that are like up here on the chart, and then not have the 493 that are at the bottom of the chart, or at least cherry pick in there. You never know for sure, but you certainly want to be more selective than taking all 500 names. That is my opinion. Okay, so high margins, and then what's going on behind the scenes. We all know that we talk about the Federal Reserve way too much because of the power that they have over the markets and the power of interest rates. So when you look, at different rate heights, where we are back in 2000, we were raising rates because the economy was just screaming higher. Does anybody feel the economy is screaming higher right now? No, it don't feel that way, right? It doesn't feel great. And, wherever you are on the social economic status, you can still be doing fine, but everybody's a little bit cautious about the headwinds out there. So that's why we've already had 2 rate cuts this year from the Federal Reserve. And we threw in a complete fit when Chairman Powell said we're not going to have a 3rd one this year, acted like a bunch of toddlers, and the market sold off. But then next year, we had a new Federal Reserve chair that is being appointed by Trump. And like anybody else who's being appointed by Trump, you're pretty much going to do what Trump says, or face significant consequences, public humiliation, all that fun stuff when he turns against somebody. So I'm pretty sure he's going to put a fairly, more of a puppet in place for us to take rates lower. So this bubble, if you will, we're actually lowering rates, where the other bubble we were increasing rates, which leads to the market reacting to those 2 things. So here's what it looks like in chart form. So you have the S&P 500. This is a 30-year look from 95 to 25. The market's going straight up there, and then you have the reset in 2000 was the dot-com crash. Then we had the financial crisis, which was a systemic problem. It wasn't just ideas not playing out. Systemic problem in the housing market and the whole processes that went into that, and then kind of screamed higher from there. Do have the taper tantrum, again, where we started raising rates, as well as started trying to slow the monetary policy, and then went right back to 0 after that. What's not shown, it's not quite caught up to 2025, but in 2022, we did start raising rates again to fight against this. So pretty toppy. Yeah, I'll give you that. But is it the same area as the dot-com crash? No, not the same market conditions at all. So conclusions. You don't really know for sure what lesson you're going to learn from history, but you have to compare it to the next best thing. So when you think dot-com bubble, yes, in the rearview mirror, absolutely a bubble. However, are we in an AI bubble now? I will conclude that we are not, because the conditions are vastly different from the ones for the reasons that I laid out. That doesn't mean it's not without risk. Am I excited about buying NVIDIA when it's up here? No. I wish I could get it 50% off, but every time we get that 50% off sale in the market, everybody gets mad at me. Yeah, it would be nice if we could get in on those names a little bit cheaper. Okay, here's your team in Anchor Star Wealth. Thanks again for attending, and we will take questions live if anybody has a question.
Right here. So what if you're wrong? It really is a bubble.
Okay, so the question there is, to repeat it for everybody since I'm on a headset, is what if I'm wrong? Which is always a possibility, right? So you never can guarantee anything in the investing world. So if I'm wrong and it actually is an AI bubble and the AI thing isn't going to become a thing, it's a temporary thing. So for the names that we're in now, especially the Mag 7, would they go lower? Yes, they would go significantly lower. They would also take the rest of the market with it as we reset. But I would say in this case, we're not looking at a 90% drop like the bubble. We'd be looking more like a 25 to 30% drop. So definitely put us in recession if all of a sudden AI was just a joke, right? That never panned out. That's if you're passively looking at it. We're active. We look at it every day. Can I predict when we would have to cry uncle in the AI space? I don't know, but it would certainly be the only thing we're talking about if things started to turn south for AI, for sure. And because that would make you question everything else along the way. All right. Any other questions out there? All right. Thanks so much for coming out. And thanks everybody for listening in. Appreciate it.
I don't want to interrupt your flow, but that one
Yep, we're
chart,
clear.
I thought it was saying that this was the AI company, but I didn't recognize any of those.
Those are the new AI names, which you wouldn't recognize.
They're making the most money now, the new ones?
No, they're the today's startups, if you will, versus one thing if it's
So
Amazon.
Big 7 has competition from other folks?
Yeah, it's the new idea crew versus the big firms that pivoted into AI.